Hello everyone and welcome to Moementum channel. My name is Mo, and in this video we're going to talk about two undervalued dividend stocks to consider to buy or watch right now in the stock market. Both of these stocks have upside potential of close to 20% and are considered to be dividend stocks, so might be very interesting to many of you dividend stock investors out there. Let's get into it. The first undervalued stock to review is CVS Health, traded on New York Stock Exchange with ticker symbol CVS. It was last traded at $69.72, but it is showing a fair value of $82.03 based on its real or undervaluing intrinsic worth. This shows an upside of 17.7% growth, but with a medium level of uncertainty, making it an enticing undervalued stock in the healthcare sector to buy or add to your watch list right now. The fair value is calculated based on Finbox fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair valuation per share. Looking at CVS financials, we notice that company's revenue has been growing over the past several fiscal years. In fact, the year-over-year revenue growth for CVS shows a 31.9% increase in the fiscal year ending in December 2019 compared to the year before. Moreover, CVS Health has a double-digit gross profit margin, hovering around 16% over the past several fiscal years. The company has also reported a net income of $6.6 billion in the fiscal year ending on December 31st, 2019. That said, its net profit in its latest quarterly earnings for September 2020 was at $1.2 billion, which is less than the $1.5 billion net profit for the September 2019 quarter. As for company's balance sheet, their current liabilities exceed their current assets over the past several fiscal years. This is not ideal and results in a current ratio of less than 1 for CVS Health, suggesting that the company may not have enough financial resources to meet its short-term obligations. Although company's total assets well exceed its total liabilities, which is a positive indicator. The company is also showing a positive free cash flow, mostly generated from its operations, which is a positive sign. Looking at peer benchmark review, you'd notice that CVS Health has a market cap of over $91 billion. The company's stock had a one-year stock return of negative 2.2% compared to an average of 3.8% return for the healthcare sector. From a stock volatility perspective, CVS Health stock has a beta of 0.79, which is virtually the same as the beta of 0.78 for the healthcare sector, suggesting similar levels of volatility in the stock price for CVS compared to the sector median. CVS Health is an American healthcare company that owns CVS Pharmacy, a retail pharmacy chain, CVS Caremark, a pharmacy benefit manager, 𝗖𝐋𝐈𝐖, a health insurance provider, among many other brands. The company's headquarters is in Rhode Island. CVS Health does pay a dividend, and its dividend is currently yielding 2.87%. The company's dividend payout ratio is only at 33.08%, which is very healthy, showing that the company has a lot of room to grow its dividend payment in future years. At this time, the company hasn't announced its next dividend payout date, but most likely it will be declared in early January 2021. Looking at CVS Health's last quarterly earnings report, which was announced on November 6th, the company had earnings per share of $1.66, which showed a 24.3% plus positive surprise compared to analyst estimates. What's more, the company reported revenue of $67 billion, which slightly surpassed analyst estimates by 0.7%. The date for next quarterly earnings is yet to be announced, but the company is estimated to report revenue of $68.6 billion and earnings per share of $1.24. Though majority of analysts have lowered their estimates of earnings per share for CVS over the past 90 days. You can see at the bottom left graph how CVS stock price has reacted after earnings report over the past several quarterly earnings. You notice within the past 6 quarterly earnings report, the company's stock has decreased 2 out of 6 times after the earnings report was announced. Following its last quarterly earnings report on November 6th, the stock price went up by 9.97%, which is quite impressive. The second undervalued dividend stock to review is no other than a company in the financial sector, and this company is AFL. AFL stock, which is listed on New York Stock Exchange with ticker symbol AFL, was last traded at $44.20, but it is showing a fair value of $53.31 based on its real or undervaluing intrinsic worth. This shows an upside of 20.6% growth though with a very high level of uncertainty, making it an enticing undervalued stock to buy or add to your watch list right now among the various dividend stocks out there. The fair value is calculated based on Finbuck's fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their valuation per share. Looking at Aflac's financials, we notice that the company's revenue has been hovering around $21 billion over the past several fiscal years. As for year-over-year revenue growth, you notice mostly single-digit increase or decrease for Aflac, showing some inconsistencies over the past several fiscal years. Aflac's net profit, though, is showing a considerable improvement in the September 2020 quarter compared to the same period in 2019. As for company's balance sheet, their current liabilities exceed their current assets over the past several fiscal years. This results in a current ratio of less than 1 for Aflac, suggesting that the company may not have enough resources to meet its short-term obligations. This, of course, is a little bit of a red flag, although company's total assets well exceed their total liabilities. Aflac is showing a positive free cash flow, mostly generated from its operations, which is a positive sign for this company. Looking at peer benchmark review, you'll notice that Aflac has a market cap of over $31 billion. It had a one-year stock return of negative 14.6% compared to an average of 1.6% return for the financial sector. From a sector volatility perspective, this stock has a beta of 0.99, which is higher than the beta of 0.64 for the financial sector, suggesting more volatility in the stock price for Aflac compared to the sector median. Beta is a measure of the risk arising from exposure to general market movements. Aflac is an American insurance company and is the largest provider of supplemental insurance in the United States. The company was founded in 1955 and is based in Georgia. In the US, Aflac underwrites a wide range of insurance policies, but is perhaps more known for its payroll deduction insurance coverage, which pays cash benefits when a policyholder has a covered accident or illness. Aflac does pay a dividend, and its dividend currently sits close to 2.99%. Its dividend payout ratio is only at 16.76%, which is very healthy, showing that the company has a lot of room to grow its dividend payment in future years. Its upcoming dividend payment date is March 1st. The ex-dividend date for Aflac stock is February 16th, which means if you own shares of Aflac before this date, you're entitled to the upcoming dividend distribution of 33 cents per share by the company. Looking at Aflac's last quarterly earnings report, which was announced on October 27th, the company had earnings per share of $1.39, which showed a 22.3% positive surprise compared to analyst estimates. The company reported revenue of $5.66 billion, which just surpassed analyst estimates by 3%. You can see at the bottom left graph how stock price has reacted after earnings report was announced. Within the past 9 quarterly earnings report, the company's stock has decreased 4 out of 9 times. You'll also notice that all the changes in stock price after the quarterly earnings report announcements were by 1 digit. There you have it, folks, my 2 picks of undervalued dividend stocks to consider or to buy or watch right now in the stock market. Do you own any of these 2 stocks in your stock investing portfolio? Let me know in the comment section down below. Hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from this video as well. Please don't forget to subscribe to Moementum channel. Here on Moementum channel, we post weekly various videos about stock market investing, finances, and financial freedom. Hope to see you next time.